Typing your income into an online mortgage calculator generates a quick monthly estimate. Often, buyers mistake this preliminary math for an actual funding guarantee. In a competitive housing market, a theoretical estimate holds no weight. Sellers and listing agents require verified proof that a buyer actually has the capital to close the deal. A pre-qualification is a surface-level look based entirely on self-reported numbers. A true pre-approval is a formal, heavily documented audit of your financial history. Entering a bidding war with only a soft pre-qualification leaves your deposit exposed. If the lender's eventual deep dive uncovers a discrepancy, your financing falls through. Securing a fully underwritten file, where the lender verifies every document up front, is the only structural defense a buyer has to prevent a multi-million-dollar transaction from collapsing at funding. When an underwriter reviews a file, your stated income is discarded. They base their decisions strictly on historical, taxed income declared to the Canada Revenue Agency. For salaried employees, verifying this requires a current letter of employment, recent pay stubs, and the past 2 years of T4 slips to prove steady earnings. If you are a contractor, freelancer, or business owner, that verification process becomes much more demanding to account for variable cash flow. Self-employed buyers must supply a minimum 2-year history of T1 general tax returns and the corresponding notices of assessment to prove earning consistency over time. This chart shows how underwriters calculate your maximum permissible loan. Your basic housing costs are capped at 39% of your gross monthly income, known as your gross debt service ratio. Your total debt service ratio is capped at 44%. Every consumer obligation, from car loans to credit card minimums, fills in that narrow 5% gap. Higher consumer debt directly subtracts from your total borrowing capacity. Beyond income, federal anti-money laundering rules mandate a 90-day unbroken statement history to verify the exact source of your down payment. Surviving this exhaustive document audit removes the guesswork. You transition from an unknown risk profile into a verified cash equivalent entity. Once your file clears underwriting, lenders issue a conditional rate hold, protecting you against rising interest rates while you shop for a property. This protection operates on a strict timeline. In British Columbia, standard rate holds expire after 90 to 120 days. While the interest rate is locked in place, the actual approval to release the mortgage funds remains entirely conditional. Lenders run a final quality control check before closing. Taking on undisclosed consumer debt, like financing a vehicle, can immediately trigger a loan denial. Even positive life changes carry risk. A sudden job switch or transition to self-employment alters your verified profile and instantly voids the existing rate hold. A rate hold is a fragile protective window. It requires absolute financial stagnation to maintain its validity. If the 120-day rate hold window closes without an accepted offer, the file expires. You must actively refresh it to continue shopping. This requires submitting current pay stubs and generating an updated 90-day bank statement history to prove your down payment funds remain intact. Extending the timeline forces the lender to perform a secondary hard credit pull to ensure no new liabilities have appeared. If bond yields and macroeconomic factors shifted during your original hold, the renewed timeline will reflect the new market rate. Down payment strategies also require maintenance. If family members offer gifted funds, you must notify the underwriter to restart the verification process. Formal gift letters and immediate bank confirmations of the transferred funds must be permanently added to the refreshed file. Housing searches often stretch across multiple seasons. Proactive file maintenance is the only way to retain your negotiation leverage when the right property finally appears. A true pre-approval relies on a physical fortress of verified documents, not a fleeting digital estimate. Presenting a fully underwritten, verified file provides psychological peace of mind and gives your offer the negotiation weight of pure cash. Before you write your first offer in the British Columbia real estate market, instruct your broker to put your file through a complete underwriting process. For more resources or a direct referral to a trusted broker, visit our website to get started.